In jungle, we have this whole concept of build to last that, we invest in few companies, we take a long-term view. There's any learnings there that you can share with our founders in terms of how do they look at their companies? Because obviously there's a race for valuation. There are a lot of sort of short-term things that people want to get out of it. There's investors' pressures, etc. But eventually, great companies take time and they are built to last. So your experience there would be very useful.
Well, first of all, I think we need to have a fairly long-term vision, maybe 3 to 5 year vision. Okay, 3 to 5 year vision, where you want to be, what you want to do, and you got to have the right focus, and you need to know the building blocks and start building them. That's very, very important. Yes, I mean, venture-funded companies have this problem of valuation because you have investors who want to go on seeing an increase in value. The investors being funds will want to send their monthly, quarterly reports to their LP to say, hey, we are up 1x, 2x, 3x, and all that, because they have to raise the next fund in 2-3 years. Everybody is a rat race, right? Everybody is a rat race, and you got to play along. And like in everything else, there is value creation and valuation. Sometimes valuation exceeds value creation. Then you got to fast forward value creation to meet the valuation, and the game goes on. So if you think valuation is always your birthright, you're going to miss, because valuation has got to match value creation. Sometimes valuation could be far ahead of value creation for whatever reason. There's excitement, there's herd mentality, excess demand, etc. But sooner or later, you got to catch up on value creation. So you got to learn that. Valuation is something that we aspire and to get, but we have to create value. And you have to make sure the next time you go to market, you exceeded the value that is expected in the last round. So you've got value creation has always got to be ahead of valuation, but sometimes valuation goes ahead. So the reality you got to believe is you should be there for the long term. You have to create great value. You have to create a moat, and you have to create a competitive advantage, and that is the true source of value. And valuation may be ahead, valuation, but it may be exhilarating, may give you a big kick. But if you don't do that, you'll be in trouble. Second thing, very important, Anurag, and this time, please respect capital. Respect capital. Somebody has given you money. The money is equity. The money has to earn 24% a year, which is very, very high returns. It's not possible for everybody to earn that kind of money. And in venture, because the flow of capital, you can grow very fast. But when you grow very fast, remember, at the end of the day, you are a business. I remember one of those big e-commerce companies were one day selling Apple computers, right? So in my office, all the young guys came and said, hey, we want to buy. I said, what do you want to buy? What do you want to spend money? We're getting 20% discount. Now you sell Apple at 20% discount to the listed price. The whole world will buy from you. You can get $100 billion GMV if you have $20 billion to lose, right? What is so big about that? Where is the customer loyalty? Where is the customer delight? Why is there people following you? So you got to respect capital, understand what builds value. What builds true value for any company is the customer is happy with you, you deliver a superior product, you deliver it on time, you exceed their expectation, and they develop a loyalty, and that creates an annuity. So you got to find out what creates a good company, and that you got to be very clear in your mind. And the rest of it, the glamour, the gloss, is something that you do for building a brand, but don't believe it is real, because the world makes you a hero today and a zero tomorrow. Okay, there's nobody who's a hero forever in the world. And if you believe you're the only real hero, you are very mistaken, because life is very tough. And the third thing, you got to be a home to the best people who come and slog it out for you. You got to motivate them, and you got to treat them with respect, treat them well, and you got to give them this place where they realize their dreams. Every human being has dreams. You can realize your dream, a dream of achievement, a dream of making money possibly, a dream of living the life that you want, showing people what you are. And for so many of us, we have to prove we are the smartest among everybody in a group where they're only the smartest people. And the next point is you have to win the respect of society. Now, society will only respect you if you're one, ethical, if you put society before yourself, right? You're not selfish, self-centered. You don't show off your wealth or something like, say, I'm the greatest all the time. It works for Ali. It may not work for everybody. And you also are a good human being. You're a good human being because people respect good human beings. You got to be all that and a high achiever, and it's very difficult. So you got to get the respect of society, right? And you got to treat your investors well. I find many people, they come to you for capital and then they don't respond to you. They don't give you information. They think that, you come into the house, you're an investor, and then that's okay. They got no obligation to you. I keep telling them, every month send a one pager. Every maybe 2 months have a call, just a call, half an hour, tell them what you're doing. Keep in touch with them. Meet them once a quarter. Meet new investors once a quarter. Just inform them what you're doing. Because when the time comes to raise capital, you'll have so many people knowing you, it becomes very easy. There'll be excess demand. And when you want capital, you go around and try to do it. It's not going to work. It's very difficult to build that kind of following and respect everywhere. So you've got to plan ahead. So you've got to do all these things when you build your company. And that's how you make it built to last. And remember, value is only there in the long term. In the short term, if you get valuation. In the short term, you don't get value. Value is there in the long term. Short term, there is valuation because of scarcity, excitement, technology, whatever it is. But the valuation to be real, then you got to create value, and that takes time. So you got to be humble. You got to have your feet rooted in the ground. And the bigger you become, the richer you become, you got to be more humble, because you got to ask the question, did I really deserve this? What did I get it for? Have I achieved so much which nobody has done before? Because in society, Anurag, you see so many great people, so many brilliant people, so many people, but they are not rich. They don't have the wealth. They don't have the dollars that maybe you have, because you happen to be in the right place, the right time, right? So we got to have a level head and feet on the ground and be humble, because humility is something that you need to have. The greatest, I think you have got to build these personal characteristics to be the leader and to build a company. And build to last means that, there is always great value embedded in the company.